power law very much applies to venture,
Uh-huh.
right? So the top 10 companies, a year drive most of the returns. There's only a handful of funds that get into those companies early on. And so you look at top decile versus average, the delta is much larger in venture than any other asset class. And so as a fund of funds, what you want is a single manager to meaningfully impact your overall portfolio. Now, meaningful impact is a broad word.
Right.
In a typical fund of funds, if you're making 15 to 20 underlying fund commitments, say each manager has around 30 companies, and you're trying to minimize overlap amongst the managers, you're generally looking at 400 to 500 these distinct companies.
Okay.
10% of those companies generally drive most of the returns.
Mm-hmm.
You want to make sure that the company that drives the return, you were invested in with the manager where you size it appropriately relative to your overall fund of funds. And so when we double click on our funds, the top 10 portfolio companies, not the funds, but portfolio companies, return sometimes multiples of our fund of funds. So individual companies, top 10, can return more than 1x your fund of funds.
Okay.
That's because, well, you pick the right manager, they back the right company, but you also concentrate a dollar with that manager so that a single company, 5 to 10x fund outcome can meaningfully impact your overall fund of funds return.